What mistakes are home buyers making right now? First-time home buyers are facing a difficult market right now. Mortgage rates are higher, home prices are still elevated in many areas, and the cost of home ownership is increasing, including home insurance, HOA, repairs and maintenance is often higher than what the buyers expect. So many buyers are asking, is this the right time to buy? But the better question is, am I prepared to buy correctly? Because in today's market, the biggest risk is not buying a home. The biggest risk is buying a home without a strategy. So, starting with the house instead of a plan. This is the first mistake most home buyers make. They are on Zillow, Redfin, or whatever is their favorite app, keeps browsing, and they keep looking at the pictures, the prices, the kitchens, the backyards, and the school ratings. But before falling in love with the home, buyers need to understand their complete financial picture. What a monthly payment is, truly, is it comfortable, how much cash should be in reserves, how much down payment makes sense, total ownership cost, how long will this home serve. The lender can tell you what you qualify for, but does not automatically mean that that number is right for your lifestyle, goals, or long-term wealth plan. The second issue is focusing only on interest rates. The second mistake is big. These days with the high interest rates, they do matter, but people just focus on that. Many buyers say, I'll wait until the rates come down. But waiting has a cost. You may continue to pay rent, miss principal deduction, delay tax benefits, and lose years of potential appreciation. And if rates fall more buyers will return, increasing your competition. The better question is not, is the rate high? The better question is, does the full ownership equation make sense? Can you afford a payment? Can you keep reserves? Is the location strong? Can you hold the home long enough for ownership to work? If this kind of practical advice is useful, please click on the subscribe button and help you make better home ownership decisions. The third mistake people make is undermining the total cost of ownership. Underestimating the true cost of ownership is another big issue. Your mortgage payment is not the only cost. You also have property taxes, insurance, utilities, HOA dues, if applicable, repairs and maintenance, appliances, roof, plumbing, electrical, and future upgrades. This is where many first-time home buyers get surprised. They buy the home, move in, and then the costs begin to add up. It doesn't mean home ownership is bad. Home ownership must be planned. A smart buyer does not ask only, can I make the payment? A smart buyer asks, can I own this home comfortably after the payment? So, the last is confusing lowest price with best value. The big mistake that a lot of home buyers make is they think that the cheapest priced home is the best deal. The cheaper home may need expensive repair. It may have a poor floor plan. Why nobody else is buying, or huge HOA dues, or even does not even qualify for insurance. The better question is, which home gives the best combination of affordability, condition, location, risk, control, and long-term value. Buying cheap and buying smart are not always the same thing. So, first-time home buyers are making 4 mistakes right now. First, they just start looking at the pictures, the home, instead of focusing on a right-sized plan for their home or home ownership. The second issue that we are seeing big time today is their focus on the interest rate. Just remember that 1 year that they let a property purchase pass them, it's about 6% appreciation here in the Bay Area. Do you see what would happen? Then that's the other thing. Does this home fit for my life, my finances, my wealth plan? That's the third one. And people just think buying cheap is going to make them buy the best smart deal. And that's not true. Buying cheap will get you a compromise product that nobody wants. That's not going to be the smartest purchase. I hope this helps. Thanks for watching. See you in my next one.